Hi, I'm Ruban Selvanayagam from Property Solvers Auctions. In this video, I want to take a look at which types of property consistently achieve higher success rates at auction, and why. Because although auction rooms attract a wide range of buyers, the truth is that some property types outperform others. Not by chance, but because auction conditions match the motives and mindsets of certain buyer groups, far better than traditional private treaty routes. And this is something that most sellers never hear explained clearly, so let's break it down the right way. Because when you understand what buyers are really looking for and why auctions favour specific circumstances, you'll see why some lots fly and others lag. Auctions thrive on certainty, transparency and speed. Buyers arrive focused on numbers, risk and execution. The properties that sell best are those where risk, value and opportunity can be quantified quickly, and where the accelerated timeframe works in the seller's favour. The first and perhaps most obvious category is property needing refurbishment. Not mildly dated homes, but genuinely tired, unmortgageable, structurally questionable, non-standard or upgrade-heavy projects. Private treaty buyers tend to overestimate costs or hesitate when survey issues arise. Auction buyers, on the other hand, especially traders and developers, move in the opposite direction. They run the numbers fast, they understand refurb inflation, contractor realities and exit margins. They're comfortable pricing risk within the required timeframes, typically 28 days for unconditional auction sales. This is why unmodernised houses, flats, bungalows and other residential buildings regularly exceed expectations at auction, because the competitive environment rewards anyone confident in their numbers. Next are properties with legal or title complications. These are properties that carry issues that would spook the average retail buyer, but not a seasoned investor who knows how to solve them. Common examples include short leases, absent freeholders, boundary disputes, title splitting opportunities, restrictive covenants, rights of way or access queries, historic non-compliance issues, missing completion certificates, part built or unconsented works. Most estate agents struggle with these types of properties because mortgage lenders often won't approve finance without complete clarity, and retail buyers tend to rely heavily on that funding. In an auction environment, that dynamic is very different. The legal pack sets out the position up front. Solicitors and surveyors become involved early, and experienced buyers, often cash purchasers or those accessing bridging finance, price the risk into their bids, rather than waiting for certainty. This creates competitive tension around assets that might otherwise linger on the open market or fail to sell altogether. Another strong category is repossessed, probate and inherited properties, particularly those requiring work or where beneficiaries want a fast, clean sale. In repossession cases, mortgagees in possession are under a legal duty to take reasonable care to achieve the best price reasonably obtainable, not simply to sell at any cost. A properly run auction helps demonstrate that duty has been met through open competitive bidding. By contrast, private treaty sales in these situations often struggle. Chains collapse, buyers chip away at the price, and momentum evaporates. Auctions remove much of that friction. Defined completion deadlines provide speed, and the transparency of the process reassures all parties that the property has achieved its true market level. Executors value the certainty and audit trail, investors welcome the clarity and opportunity, and the process aligns far more closely with the motivations on both sides of the transaction. Then of course there are tenanted and income-producing properties, particularly those with added layers of complexity. That might include below-market rents, long-standing or regulated tenants, Section 13 constraints, historic arrears, licensing or wider compliance requirements, and the need for EPC upgrades. The direction of travel under the Renters' Rights Act has added another layer of consideration, with greater emphasis on tenant security, more structured rent review processes and tighter possession routes. As a result, it remains very unusual for owner-occupiers to take on properties with tenants in situ, and access to mainstream mortgage finance is pretty much a no-go. Auction buyers, however, particularly landlords using cash or specialist lending, approach these assets very differently. At Property Solvers Auctions in recent years, we've seen landlords become far more sophisticated in their analysis, moving well beyond headline gross and net yields. They're increasingly assessing future rental trajectories, regulatory and compliance costs, EPC upgrade requirements, financing assumptions and long-term risk, and pricing all of that in at the bidding stage. That's why HMOs, multi-unit blocks, mixed-use premises, regulated tenancies, and even properties with more complex occupancy arrangements often achieve stronger outcomes at auctions than through estate agents. The buyer pool is more specialised, better informed, and significantly more decisive. Land and development opportunities also tend to do very well at auctions. This includes plots with outline, full planning or permitted development rights, backland parcels, garden splits, commercial to residential angles, airspace rights, and properties with uplift potential subject to planning. In private treaty, deals tend to drag on, option agreements stall, and planning risk kills momentum. But at auctions, developers bid on upside, not certainty. They factor planning probabilities, resale values, build costs and margins. As long as the legal position is clear and the guide price reflects feasibility, competitive bidding is common. As pressures in residential buy-to-let have increased, commercial property continues to be a very active auction category, particularly where assets benefit from strong footfall, sit in demand-led sectors such as logistics, or offer clear repositioning potential. These can include retail units, offices, workshops, light industrial units, mixed-use blocks, and vacant pubs. Commercial properties move slowly in private treaty. Deals often take many months, and buyers renegotiate once surveys or searches reveal realities about EPC requirements, repair liabilities, or lease terms. At auction, the buyer profile is different. Investors evaluate income potential, business operators see opportunities, and repositioners understand alternative uses. The fixed timescales encourage commitment without the lengthy back and forth typical in private treaty sales. Some of the strongest auction outcomes come from properties with genuine value asymmetry, assets where the average buyer sees risk or complexity, but experienced purchasers recognise opportunity and the scope to value engineer the asset. Examples include properties with major internal damage, Japanese knotweed, subdivisible houses, units ideal for assisted living conversions, properties suitable for title splitting, and buildings with latent development value. These are the lots that often generate quiet enthusiasm beforehand and furious bidding just before the hammer falls. The mainstream market doesn't know what to do with them, but investors absolutely do. There's also a whole class of motivated seller circumstances that perform exceptionally well at auction. Financial pressure, divorce, fast relocation requirements, asset rationalisation decisions, portfolio restructuring, lease extension timing, and lender-driven deadlines, amongst others. In these scenarios, time, certainty, and transparency are worth more to the seller than squeezing out every last pound. Auction buyers respond because the process supports rapid decision-making based on defined risk. So, to draw this video to a close, what type of properties sell best at auction? The pattern is always the same: assets with complexity, opportunity, time sensitivity, or refurbishment potential. Properties that struggle on the open market often thrive in the auction environment, not because they're inferior, but because the buyer pool is fundamentally different and the process is built around commitment rather than hesitation. When you match the right asset to the right route, outcomes improve dramatically. When you try to force private treaty stock through an auction funnel, or auction stock through a private treaty process, results suffer. Understanding this distinction is half the battle. If you're considering selling at auction, or you'd simply like a realistic view on the best route for your particular property, you can complete our inquiry form via auctions.propertysolvers.co.uk, search for Property Solvers Auctions online, or email the team directly at auctions@propertysolvers.co.uk, and we'll be more than happy to advise. And if you found this video useful, please like the video and subscribe to the channel. We share regular data-led insights into UK property auctions based on what's happening right now in the market. A big thanks for watching.